Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is June 21st, a Wednesday. We are going to take a look at one we've covered on this channel before. I used to own this company. I do not anymore. We are going to talk about Intel. This is out of the information technology sector. Let's jump right in the video. And again, I have owned this company before. You're probably familiar with them, right? They sell microchips. They are microprocessors, systems and devices, servers and products, FPGAs and programmable devices, ASICs, devices, right? Chipsets, mobile, desktop servers, graphics processing units, right? They do have some gaming component to them, memory and storage, wireless products, and network communication. So anything around the computer space, right? They are involved in Intel Core, Xeon laptops, right? Desktops, workstations. So again, you're probably wireless products. You're probably familiar with the company. A lot of the computers that I get whenever I go from a company, move from one company to another, you'll get a laptop. My laptop now, it says right on there, a little sticker Intel inside. That's the microprocessors that are inside the chips that are inside the computers. So again, you may be using Intel products and not even realize it. It might be in your gaming console or your laptop or desktop that you're using, or you may just be familiar with the company and know them outright. If you want to know more about them, www.intel.com. That is their homepage where I pull this information from. There's some more information there. Again, if you're interested, go ahead and check them out. Now for the fun part, why are we here taking a look at them? Down 6% on the day. This one has really been beaten up lately. It did have a run up, but obviously today was a big drop off. And overall, the chip market, for whatever reason, today really took a nosedive. Whenever I was looking at companies to cover today, I saw quite a few in the chip. This particular sector here, Intel was not the only one. Qualcomm, AMD, several others I saw were down 2, 3, 4% on the day. This one just happened to be down the most, so I thought we'd take a look at it. 6%, closed out the day at $32.90. We are talking about Intel Corporation, ticker INTC. Excuse me, out of the information technology sector. 52-week range as low as $24.59, as high as $40.73. So right now they are a little closer to their 52-week high than their 52-week low. Average volume 45.9 million. Today's was 69, and again, pretty much just a straight sell-off throughout the day. Market cap of 137.226 billion, a beta of 0.87, so they are less volatile than the overall market, but not by a lot. PE ratio is not even available, right? It's in the negative. Obviously, it's probably so negative they don't want to show you. Earnings per share is negative 0.71. So not good. None of the numbers you're going to see on this company are good right now. That is part of the reason I sold out of this one. As soon as they cut the dividend, it was kind of the last straw for me. I was willing to stick it out so long as they were willing to keep the dividend around. But as soon as they got rid of that, it was just too much of a risk to keep in my portfolio anyway. Next earnings date is coming up somewhere between July 26th and July 31st. Forward dividend is 50 cents paid out in the year, right? So they are quarterly payer. We'll see that here in a minute. 1.37% dividend yield. Like I said, there have been a recent dividend cut. We'll see that here in a moment. And a one-year target estimate, at least according to Yahoo Finance, of $31.37. They're currently sitting above their estimate here for Yahoo Finance. I'm not affiliated, just one of the sources I like to look at. Payout ratio not available because their payout ratio is in the negative. 5-year average is 2.95. So let's look at dividend yield theory, right? Under statistics, one of the criteria we look at here, or I look at here, is dividend yield theory to see if this is potentially undervalued. 5-year average is 2.95. They're currently below that at 1.37. So this speaks to overvaluation, right? If the current dividend yield, right, 1.37, or what it calls forward dividend yield over here, is lower, then it speaks to overvaluation. If this number was higher than the 2.5 or 2.95, then it would speak to undervaluation. Ex-dividend date was May 4th. They paid out on June 1st, so if you were to buy them now, you'd be in line for the next dividend. Let's jump over under financials. I like to look at free cash flow because we want growing dividends over time, and you can only have that if free cash flow is growing over time. So 2019, 16.9 billion, 2020, 20.9. There's growth there. Big drop from 2020 to 21. This is really whenever things really started hitting the fan, so to speak. 2021, 9.6 billion, and then 2022, negative 9.6 billion here. So big drop there. I expect even 2023 to be negative. So again, look for the earnings in July 26, but I would expect this to be negative for 2023 as well. So far, none of the numbers look good. I always recommend more than one source, so let's look at another one. And another one that I like is stockanalysis.com, and they have 28 stock analysts that have taken a look at this. They call it a consensus hold. For me, it was a consensus sell, but I'm just going to leave that on the table there. They have a low estimate of $17, and hey, if you could get it for 17 bucks, if it dropped way down to $17, I might actually look back at it again. But that would be a 48.33% decline from where it currently sits, and that would be a new all-time low. We saw on the previous page their current 52-week low is around $24. So they see potential new 52-week low over the next year here. Average estimate $30.82. That's even lower than they currently sit at 6.32. So all around, this just is overvalued, right? If you happen to run it up, I think it was around 35, 36, and maybe sold out of it to collect some of the loss or limit some of the loss. Kudos to you. And if it happened to hit their high of $45, that would be a 36.78% increase in the stock price. I do not see that happening over the next year or anytime soon, really. Intel has a lot to do to turn around potentially. Let's keep looking at this one. Under statistics, another one that I like to look at is return on invested capital and return on equity. ROE is return on equity. ROIC is return on invested capital. I like 10% or better or in line with their industry standard. They are not in line with their industry standard, and they are negative. Return on equity is negative 2.90, not good. Return on invested capital is negative 2.20, not good. None of the numbers for this company look good at all right now. Let's keep going. Let's look at the dividend here. So taking a look at the dividend here, as you can see, payout ratio is negative. That's not good. Negative 73.53. That means they are in the whatever they're doing to pay their dividend in debt, using debt. They don't have money to cover their dividend. That's what that means, right? And they have negative dividend growth. So none of these numbers are good. They just recently cut. The reason their dividend growth is negative is because they recently cut it down. You can see here, back in 2021, it was at 34 some fractions of a penny. They jumped it up to 36 and some fractions of a penny in 2022. And then in May of 2023 here recently, they cut the dividend. Right after this is whenever I sold. None of the numbers looked good at that time. They still do not look good now, a little over a month later. It is just not a company I would be interested in right now. Like I said, maybe if it dropped way down in the 17s and these numbers started to shape up a little bit. But right now, I would avoid this company. That's just my stance on it. If you are an Intel dividend investor, let me know down in the comment section below what you think about Intel right now. I'll be really interested to hear or read your comments and see your perspective on this one. But for me, this is a avoid right now. Maybe if they turn some things around. I do love the company. I love what they're doing, bringing manufacturing back to America, building new chip plants. So that is part of their turnaround plan, but really they need to start putting some things in place and actually starting to turn this thing around, because the numbers overall just look terrible. Again, maybe if it dropped down into the teens, I might be willing to take a look at this one again. But right now, where it sits at $32 and some change, way, way overvalued in my opinion. I changed the name here, Vested Interest Stock Screener. This is what I looked at for stocks to kind of give them a quick high-level screening to see if I'm interested at all in investing. And if I am, if they meet 4 of the 7, if they're not a financial company, or if they meet 5 of 8, if they are a financial company, that tells me I may be interested to do a deeper dive on the company. So that's why we changed the name here, Vested Interest Stock Screener. That's what this is. Well, that is it for this one. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community, trying to build a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we might have held in the past, but we sold because the metrics just do not look like what they need to look like right now. It's okay to sell out of a stock if it no longer meets your investing criteria. As a matter of fact, I would not suggest you hold on to a stock that no longer meets your investing criteria just because you're afraid of admitting you made a mistake, or just admitting that things have changed with the companies. Companies change over time. They need to keep up with the way things are going and with their competitors. For this one, Intel is just not doing that right now. Unfortunately, I think there's better options in the space. Qualcomm is one I was looking at in that space right now. I would probably be much more interested in that one than I would be Intel. Again, I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have some companies you'd like me to cover in the Stock Pick of the Day series, go ahead and drop them down below and let me know what you think of Intel. Let me know how your portfolio is doing. Do you own other companies in that space, in the chip manufacturing space? Let me know which ones you prefer. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research, investigation in your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.